Hello and welcome back to On the Brink with Castle Island. Today on the show, we sit down with Bruce Fenton. He's very well known in the industry, of course, as the founder of the Satoshi Roundtable, a yearly event which is inextricably intertwined with the history of Bitcoin. Bruce is also the founder of Chainstone Labs, and he has had a long career in the securities industry and understands it intimately, not just in terms of the plumbing and how clearance and settlement works for an equity security, but also the spirit of securities laws and what kind of instruments these really are and how they fit with crypto markets. This is a wide-ranging conversation. We cover disclosure standards, how much control governance tokens really give you and whether there are paradoxes there, and fundamentally why trying to avoid securities laws causes token issuers to create subpar instruments. And lastly, we talk about Bruce's pitch for security tokens, why some people like them for the wrong reasons, and what the advantages really are of tokenizing a security. I always have a ton of fun talking to Bruce. This is a great one. We cover a lot of ground. Let's dive right into it.
Brought down by bad mortgage investments, Lehman, which has 25,000 employees, will be liquidated.
The federal government loans American International Group, AIG, $85 billion.
This is a different kind of market, and the Fed is asleep.
The federal government is stepping in to stabilize Fannie Mae and Freddie Mac, the two mortgage giants that have been threatened by the housing crisis.
The Bank of England has pumped £75 billion more into Britain's ailing economy with a new round of quantitative easing.
You print a couple $1 trillion and all of a sudden people start to worry. So out of this worry, we have something called the Bitcoin.
Bruce Fenton, thank you for coming on. I may be overdue for having you on the Brink. Either way, welcome to the show.
Thanks for having me. Great to be here with you.
We've been rehearsing for this by doing little clubhouse talks, but now this is the real deal. You know, this is
nice.
We're rendering it permanent. For the listeners, Bruce has these good weekly chats on Clubhouse about crypto. It's kind of like a podcast, but they don't get recorded. So I figured we would record it. And here we are.
Perfect. Excellent.
So I know a lot of people in the crypto industry know you on account of the Satoshi Roundtable, and you've done a lot of things, but maybe the more immediately addressable thing would be talking about Chainstone Labs, what that is, and kind of what it aspires to be.
So Chainstone is basically an investment and advisory company that's focused on the convergence of distributed ledger technology and traditional assets, particularly securities. So we're really interested in anything that's building on those two things. So if it's something that's a way for Bitcoin to be used as settlement for securities, or if it's some way that securities are going to be put on blockchains, or something like decentralized exchanges. But this is everything we do is kind of under the regulated environment. I'm very much a cypherpunk and very kind of minimalist government person, but our plans as a business are very much built with the belief that these regulations are here to stay, whether you like it or not. And so we're very compliance focused as well.
And you also own a broker dealer, correct?
Yeah. So Chainstone owns Atlantic Financial, which is a registered investment advisor. It owns Watchdog Capital, which is an SEC registered broker dealer and FINRA member. And it also owns the Satoshi Roundtable, which you mentioned, which is a leading industry event.
That's right.
That we're quite proud of.
And unfortunately did not occur this year, right?
Well, we did have it actually because we were at the very beginning of the year before COVID. So we didn't have to cancel. We were lucky. And then next year, we're probably going to have to modify it a bit, for next year, just because there's still a lot of uncertainty.
The Satoshi Roundtable is kind of associated with, I feel like there's always some new, like drama that comes out of there. Not to put it in a pejorative, but I feel like there have been some like pivotal conversations that have happened there, which are now like memorialized in Bitcoin history or something.
Yeah, it sort of is. I mean, it's in its seventh year. So year two was really well known because I think what happened is Adam Back was going to come, and there was this big debate about the block size, and he tagged Brian Armstrong and said, "Hey, why don't you come and we'll talk about it?" So then once those two were discussing it, it sort of became as an organizer, I wasn't actually super psyched because it was supposed to be kind of a happy, fun thing, and ended up everybody arguing. But it was sort of historic. I mean, that was like the last hurrah of the block size debate. And you had all of these people, Roger Ver and Gavin Andresen and Adam Back and, core developers and all these other people who probably haven't spoken since. So we're sort of in the same room. And that's one of the things we're proud of. We brought together, I mean, just this year we had Adam Back and Justin Sun in the same photo. And we've had a lot of, William Shatner and Ron Paul and Vitalik and Brian Armstrong, all kinds of cool people have attended. And I think we've tried to be really big tent and welcoming to everybody.
Yeah.
Which isn't always popular.
Yeah, I know. It's always kind of funny seeing like the fallout from the Satoshi Roundtable or something, but that doesn't seem to deter you. I seem to remember, like, did Brian Armstrong write a blog after the second Satoshi Roundtable, like what happened at the Satoshi Roundtable? And that's kind of,
yeah, he did.
That's one of the key pieces of literature in the block size war. I guess technically he was on the losing side, although he's still with us, still a Bitcoiner,
Yeah.
So that's,
and he's doing pretty well from the startup guy that I first met in Miami, looking for his first 3 million.
He's doing good.
I wish I would have bought into that one.
Yeah, they're worth a shade more than that now. I mean, I guess I won't touch on the political stuff out of prudence, but I will say I have been very impressed by some of Coinbase's decisions lately, sponsoring core devs. That's great. And they recently, just today, they released a transparency report saying what federal agencies they give data to and what kind of requests they get for data. So
interesting.
It seems to me that Coinbase is making a deliberate move to have a rapprochement with kind of the Bitcoiners, which I appreciate.
Yeah, I think so. And I think they get a lot of flack from Bitcoiners, and I understand the reasons, but I think it's also important to note that, they've brought on a lot of people. The fact that it's been an easy, reliable, and so far pretty much, scam-free and hack-free platform. I mean, that's given some stability. There's a lot of people who, they don't know who you or I are. They can't name a single core developer. They don't care about the intricacies that we care about. But, they're dentists and doctors who go and grab a Coinbase account and buy $100,000 worth of Bitcoin. And there's now a lot of people like that. So I think Coinbase should get some credit. The other thing that I always give credit for, I'm sort of in awe of anybody who builds in this space. This space is brutally hard. I mean, it's hard just to survive, just to make it 5, 6, 7 years without being embroiled in some sort of scam or losing everything or, taking some other kind of beating is impressive. But to actually build a business in this environment is extraordinary. And so, I'm kind of in awe of, Jesse and Brian and any of the other CEOs, CZ, anybody who's built a really large, successful business in this space.
Yeah, you really take your lumps being a crypto entrepreneur. Like it's so easy to be on the losing side of some like critical battle about coins and protocols, or end up somehow associated with something insalubrious or a hack or something. The longer I've been, I guess, professionally active in this industry for maybe 4-ish years now, but I've come to appreciate that more and more. I just see so many people washing out, getting disillusioned, blowing up on leverage, anything like that. It's actually quite hard to make a career in this industry. I think you're absolutely right.
Yeah, for sure. And we see people from, the kind of, Roundtable 1 7 years ago, and there's people who have risen and fallen and rised again. I mean, there's people who are kind of on top of the industry, and a lot of, this is, it's all public stuff if somebody wants to go and dig and figure out who was who. But there's people who had huge volume of they were giant miners, or they had exchanges that had, big market share, and they just, you make one misstep in this space and you can get crushed. A little bit over leveraged, or the timing on your mining, or certain different investments and things like that, getting on the wrong side of the regulators, all of these things can instantly end not just the business or the career. So to avoid those missteps and build a multi-billion-dollar business with millions of customers, I mean, it's it's quite an achievement.
And they said in that blog post today, 38 million customers. 38 million.
Wow.
I mean, I think Fidelity has something like 60 million. I mean, like, these are real big boy numbers in terms of being a brokerage.
Yeah. Wow.
Yeah.
Amazing.
On that same note about exchanges, I mean, just in the last month, we've had BitMEX kind of getting kneecapped, although they're still sort of limping along. Today, OKCoin CEO gets arrested. Not clear if that's related to the exchange or not. I mean, to me, this seems like the most aggressive period maybe ever in terms of regulators actually cracking down on exchanges. I don't know if that's your feeling. You've been involved in the industry forever. Does it seem like the most kind of pro-regulation period in the history of crypto right now?
Yeah, I think so. I think they went from the low-hanging fruit to the, 2-bit scammers, to the bigger companies, to the serious allegations of fraud. Now they've moved up the chain to like principal exchanges, kind of, looking at the big picture type of stuff, and long-term enforcement actions where they're investigating for a year, 2 years, maybe more in some cases. It seems like it's part of the maturing of the industry. It's not something that's just thought of as a passing scam, that they're gonna, make a small case about some scammer who robs 500,000. I mean, I think they're viewing this as, these are big enterprises with billions of dollars at stake, and they're taking it quite seriously. So yeah, it is a pretty strict time for regulation, but it's also a time when there's probably more things that are legal, or pretty clearly legal, than we've had before. I remember the days when people didn't know if Bitcoin was legal.
Right.
I mean, a lot of people were like, you can't own that. That's going to be illegal.
Yeah.
And I that was a common objection in the early days. They're like, yeah, sure, go ahead and hold it until they tell you it's a felony to hold it. And then it won't matter if it's on your own Trezor, paper wallet back then.
People today don't really appreciate that. There was a time of genuine uncertainty as to the legality of Bitcoin, whether you could make a transfer, whether mining was money transmission, whether running a node was money transmission. Was FinCEN going to come after you in the dead of night? Where Bitcoiner is going to get 6102'd. Still might happen. That still might happen. But there has been a lot of legal de-risking. I was actually reflecting on that, listening to the CFTC chairman, Heath Tarbert, talking effusively about Ethereum. I don't know if you caught that.
Yeah, but I saw that. How about that, huh?
Yeah, I mean, he's like, I think he might like Ethereum more than me. I mean, like, he was really praising it. Yeah, and the CFTC said in 2019, in fact, I was in the room for this speech, Heath Tarbert said, we believe, Ethereum is a commodity, and we invite the private sector to produce derivatives, venues to trade it, regulated derivatives markets. And that happened. Lo and behold, they appeared. But so far, those are the only two crypto assets that they've really unambiguously declared to be commodities. And so you have others like Ripple that are sort of waiting in the wings. Just like kind of asking when's it going to be my turn kind of thing. Might be a long time for Ripple. I don't know. I've seen them complaining about it a lot recently.
Yeah, and they had their recent article that Brad Garlinghouse wrote about how they were talking about maybe even leaving the country.
Yeah.
My speculation is that they would like to get an EOS type of deal that says, maybe you didn't offer this correctly under the rules, and therefore you're getting a fine. However, by now we feel that the XRP itself is separate enough from the company called Ripple that it's not a security. And that might be a win-win for everybody,
Yeah, an EOS deal would be probably best case for them, I think. But the interesting thing is, like Ethereum started with the Ethereum Foundation, and then, day one, Ethereum Foundation basically controlled everything. And then over time, there were a lot more stakeholders that kind of appeared, and the funding from the Ethereum Foundation didn't matter as much. So that's like a totally plausible story about how you get decentralization, not just of the network itself, but of like the decision-making capacity in terms of development and how funding is allocated and how decisions are made generally. I haven't really seen that with Ripple. I don't know. I mean, are there any other major stakeholders in the Ripple network aside from effectively Ripple Labs? I mean, if they wanted to change something about the protocol, presumably they could, right?
For sure. And also, is there anybody significant in the ecosystem that they haven't directly funded or indirectly funded? I mean, it's a pretty close-knit system.
Right.
I mean, the thing in there that might work for their favor is that the bar of sort of what we call decentralized by crypto terms versus what, the SEC thinks of as decentralized. I mean, it may be sufficient to just, not have the ability to file quarterly earnings reports and have a treasury and have a CFO and a CEO and this kind of thing, which they can do for the currency. They can make it. And I don't know too much about Ripple, but I guess the way it works now, it's, pretty open source. But yeah, I mean, I think you're right. The structure of sort of control, you could make the same argument about EOS with 21 nodes, basically, that it's certainly not centralized by like Bitcoin standards, but it may be a fair thing to say, well, this isn't a corporation. You can't file because one of the arguments you can make if you're a coin and they say you're a security, you say, well, if we don't have the ability to file an annual report because there is nobody with official role like Monero or Litecoin. Litecoin, there isn't anybody with an official role. Charlie made some software and gave it away. That doesn't put him on the hook, some sort of permanent legal thing where he has to have responsibility. And any foundation or anything that's independent of the code. The code's basically a Bitcoin fork, so its consensus rules are based on mining. And certainly influential people can influence what miners choose, but that is decentralized. That just means Charlie or anybody else has a voice. They don't have control. And if Charlie said something crazy, he would immediately lose credibility.
Yeah.
And, if Andreas came along and started talking about Litecoin all the time and put his entire, reputation behind it, he could probably push through a change, just as easily as Charlie could.
Yeah. So it's a great point. There's no one to do disclosure. There's no one to sit down and file a quarterly report for some of these community-driven projects. That kind of rankles me with regards to the more corporate or, centralized ones, at least in terms of these kind of key decision points around supply and, the token economics. Because, Filecoin would be a great example. They had some disclosures, the some disclosures about the trajectory of the coin. But if you dig into it, it's very hard to get anything like the equivalent of an S1.
Right.
And that's what I'm always looking for. If I'm not a public markets investor, but if I were, I would be ravenously reading the public disclosures. As a private markets investor, there's a lot of information that we ask for from potential portfolio companies and diligence, a huge amount of information. But then with tokens, they have an incentive to be untransparent because they want to portray the token teams, they want to portray like they're not in control and there's no one to give disclosures. But of course, there are people that can give those material disclosures most of the time. Most coins are not like Monero, Litecoin, like mostly there is like an entity standing behind them. And their incentive is to portray it like, they don't want to discuss the drivers of the valuation of the coin because they don't want it to be considered a security. And so we have this really horrible situation where it's like an environment of informational poverty and, investors can't get the tools to make good decisions.
Yeah. It's a real shame that there's been so much work to avoid the securities regulation that we've really ended up with bad quality. People were in such a rush to move forward that they, around 2017, a lot of people went into lawyers and they say, hey, I want to do a thing and make a bunch of money. And the lawyer said, well, you want to make sure it's not a security. And they say, okay, great. How much do I have to pay to make it not a security? So they just did all this, engineering to try and make things not fall under the definition. And the problem with that is that splits, takes out all of the useful terms. As soon as you say something like, hey, you own equity in this business and for 10% of the market cap, you own 10% of the business and you'll be entitled to 10% of the voting. That's clearly definitely a security. So you strip out all of those things, say, okay, it's not an investment contract. It doesn't rely on this. And then you end up with something that it's harder to make a case of why it's a good investment.
Yeah. That's the great paradox of these tokens, is that things that make them investable are the things. That's the spirit of the law that makes them securities. And as you say, if you pull that out, then it's probably not a great investment, or at least it's very ambiguous. Then you're just relying on these winks and nudges from the issuing team. You're trying to figure out what they're going to do, but you don't have any codified contractual rights relative to them. It's kind of like if you look at BNB, great example. BNB token holders didn't really know what they were getting. And they have to read between the lines, try and figure out what CZ means. So the white paper said one thing, and then it turns out they were doing another thing, and then they changed the white paper, which is the craziest thing I've ever heard of. I mean, imagine unilaterally amending a shareholders agreement.
Right.
Or you're just like unilaterally amending your, incorporation documents. And it's like, yeah, this isn't a Delaware C Corp anymore. It's an LLC. Oh, and by the way, that like mandatory dividend we had, that's gone. And the board of directors is now just one person. And actually, right. We're not a software company. We're an agricultural, we're a farm now or something. I mean, it's like, it's just that level of insanity. You can't go and change a white paper. The white paper for BNB stipulated what, the token mechanics were, and they changed it.
Yeah.
I mean, they literally rewrote it.
Yeah, that's the thing when, these tokens all sound great until the plan deviates. And when you have money at stake, 100% of the time, the plan is going to deviate at some point. There's going to be a disagreement. There's going to be partners or founders who get in a fight. There's going to be a major stakeholder or shareholder or employee who disagrees with the direction with one or more board members or executives or whatever. That's just inevitable. And in corporate governance for public equities, for example, we have 400 years of history to figure that out. Like, oh, okay, here, I mean, there's whole law firms that specialize on, here's what you do if your board is in a dispute, and here's what happens if the CFO fails to certify whatever, and blah, blah, blah. I mean, there's just tons and tons of law, case law, and expertise on this kind of thing. And with a token that's sort of trying to, on the surface, look like that and mimic that, it appears, you can call it governance, but it's not really governance unless it's backed by those sort of legal terms that say, yes, your governance means something. You have, teeth behind it. You have legal rights that say, otherwise governance, it's just like a participation sticker, like those I voted things, it doesn't really mean anything.
So this is the meat and potatoes of what I wanted to discuss, Bruce. What is the deal with these governance tokens? I mean, what are you getting when you buy a governance token? Do the on-chain votes matter, or is it more a function of who coordinates the votes, or does it really not matter because the token issuing teams probably still can coordinate a majority to vote in their favor regardless?
So the thing, and I can't make a good case because I haven't found anybody who can make a good case for me yet. So if you have any DeFi champions that are listening and they want to have a friendly discussion about this, I'd love to have somebody who, really explains their side of it. But every time I've had this conversation, it goes something like, I ask a question that you just asked to say, what is the value? People say, oh, governance. Well, what's that? Oh, you can vote. And I'm like, well, can you vote on anything that means anything? Like who the board is, who runs it? You vote yourself dividend.
Yeah.
And then you get a dance around, which is usually fueled by lawyers. Like, well, not exactly. It's like you said, the wink, wink, nudge, nudge. But if you don't have those real legal rights, if you show me a piece of paper, or if you just pretend we didn't have any laws at all, we were just in an ANCAP society, and we're sitting down saying, what's a really good governance token? And we just, with no regard to law, we just wrote that. I guarantee you, if you bring that into a lawyer, the lawyer's going to look at that in 1 second and say, oh, that's a security. Because all the good stuff, like you said, all the good stuff, it's part of the definition. A lot of people don't understand that this is sort of a definitional driven thing. It's like the definition of chocolate, or, I've used the analogy of marijuana dispensaries. It's like you can go to New York and say, no, this isn't marijuana, it's a vitamin. And that's just not going to work. It's a federal law, and it's the definition is the definition. And that's what a lot of people are trying to do. Now you can go and have something that isn't marijuana, and then it's not marijuana. So you're not going to have that price premium, but you also will avoid the regulations. So it's sort of like, even if people feel that and I use that example because the majority of people these days tend to feel that that's a law that should be changed. And we have a lot of states moving towards legal dispensaries, but you still can't just do it or change the definition. And that's the thing with these securities definition. The definition of a security is very, very broad. It's stock, bond, evidence of indebtedness, debenture, investment contract. Investment contract has its own subsets, its whole Howey test and everything else. So pretty much anything, and this has been going on for decades and decades before crypto came along, any kind of structure that people tried to create, the law wanted to be broad enough that captured it. And the spirit and intent of the law is basically to say, hey, you're raising money for people on an investment. We're going to call that a thing named a security. And that thing named security is going to have a mess of rules on how you offer it and how you disclose. And that's pretty much the way the law has been for 85 years. And I don't really see that changing. They may make some aspects of it looser, but really you're going to probably fall under that definition. So what you have with these governance tokens is people kind of calling it governance, but if it's real governance and you have real power and you have the kind of power that a shareholder would have, then it's going to be a security. And that's actually good. There may be good tokens. Most of them, unfortunately, have tried to take a shortcut and say, well, we don't want to do that. That's a lot of paperwork and legal work. Let's figure out this clever smoke and mirrors structure where our lawyers will strip those terms out or divorce us enough from it that there's an arm's length and it's not a security. But, like I say, by then you've stripped out anything that made the thing, appealing to begin with.
I think my test to ascertain whether the governance rights of token holders are genuine would be something like, is there a vote that the token holders could make that would massively disempower the offering entity to the benefit of token holders? So could they overpower the corporation backing this thing to their own benefit and to the detriment of the corporation? And if the answer is yes, then okay, maybe they do have real governance after all. But I've never seen that. I mean, I guess we might have to wait for an activist kind of situation to develop.
But, I mean, can they oust the founder?
Right.
Can you? I mean, Steve Jobs got ousted from Apple because that was real governance. It was actual governance, and you wouldn't have thought that could happen. I mean, if Steve Jobs was an ICO person, you'd say, wow, I mean, he was the Vitalik of Apple. I mean, if anybody, surprising that he got ousted, but that's what real shareholder rights are and real governance rights. If you and also the terms, like you alluded to earlier, the terms on these things are kind of bizarre. They're not the kind of terms that you would have because you don't have that accountability. With real governance comes real accountability. So you don't have these situations where somebody creates an idea, throws it on the market, and then instantly they're vested on, in some cases, some, majority, huge stake in the thing. So they're kind of accelerating their payout. I mean, and there's people who've walked, they started a project, raised money, 3 months later, they cash in and walk away. And that doesn't happen or shouldn't happen in the public markets because you have, better governance that prevents those kind of things.
And you'd think the vesting would be one of the things which you could so easily encode because it's a simple formula driven thing. I mean, and I guess to the industry's credit, vesting is a more popular idea these days, but it hasn't always been. And I remember seeing a paper, I don't remember which one exactly, which said, we looked at claims of vesting in white papers and then we looked at the code, and something like 30% of the time it just wasn't written into the contract on chain.
Yeah, greed is a powerful motivator. And, I've seen it now 3 generations of these kind of waves, and it is a powerful motivator. I mean, anybody in the space, unless they're already independently wealthy or just don't care about money, I mean, could look at it and say, wow, I'm kind of smart. I could team up with a few people and make $30 million by doing, I mean, you could have done that. It wouldn't have been too hard to make a bunch of money on if you have a good name in the space or something on the, some of these DeFi tokens recently. But I do believe it's a shortcut. And I think that a lot of those people will pay later. Although I said that last time, and some of them are still living large on the hundreds of thousands of ETH that they raised. Yeah, so I don't know.
Some of them are billionaires now. So
I mean, there's a point where I mean, I don't think as a financial advisor I could say that the Ripple folks did the wrong thing. I mean, if I would have advised them 7 years ago, I probably would have said it's an illegal securities offering, don't do it. And would that have been the right advice or the wrong advice? I don't think so. It doesn't look like they're going to jail. I mean, jail isn't worth any amount of money, but if you make $4 billion and you pay $100 million fine, maybe it is. Yeah. And that's kind of a twist. And I think the regulators are sort of looking at that too. So it wouldn't surprise me if you do see some jail time or some harsher fines for some of these more egregious. I'm not talking about Ripple in particular, but and I don't think they're in that category. But some of the other projects, I think that you will have regulators come down on quite hard, like BitMEX. They already have.
Yeah, I mean, if you can make enough money such that you can fund a very well-heeled, nice office on K Street in DC devoted to lobbying Congress, that might be the point at which you are able to bail yourself out of any sticky situation.
Yeah. And it can be multi-pronged too. You can have regulators on your board and, there are super attorneys who are like, U.S. attorneys and they go into private practice, and you can have these people who, they're really well connected. They know the system. They hired half of the people who would be prosecuting you, so they can have sort of off the record, conversations with their former employees and say, hey, I'm representing so-and-so now, what is your thinking? And they can sort of steer these investigations in a way that, their counterpart may say, hey, we're kind of ticked at your client, we're going after them. And they can maybe steer that a right way, or beneficial way to the client. So there's a lot of things you can do with a lot of money. And if you make a few billion, you definitely, you're not untouchable though. There's a lot of people who think they are. And we've seen that that's not the case, probably not in any country in the world. And you can probably get overconfident just as easily as you could help yourself.
Yeah. And in Russia, being a billionaire is kind of more of a liability than anything.
Yeah, for sure. I used to work in Saudi Arabia, and I met all these wealthy people who were super well connected, and anybody would have traded places with them. And then one day a whole bunch of them got arrested. It was kind of an unexpected thing. So, you never know what your situation
was.
is.
That when the kind of royals like imprisoned a bunch of wealthy scions like at hotels and stuff for a while?
Yeah, a few years ago, there were about 400 people, very wealthy people, prominent people were arrested. And I wouldn't have predicted that. I was an expert on that country before.
Really?
I lived there and worked there, and I met many of these people. So, you just never know what's going to happen. And then some of them turned out okay. They were in for a little while and they got out, they paid a fine or whatever, and they're fine now too. So, but it does emphasize that it's a dangerous world out there with a lot of uncertainty. None of these people, I'm sure, expected that, and people wouldn't expect it here in the U.S. either.
It's interesting. I mean, you think about how we're trying to make our wealth untouchable by effectively offshoring it into the cloud, putting it in Bitcoin, and so in theory it can't be exposed to the whims of our central banker overlords and so on. But in practice, you're still instantiated in meat space, and if the ruling party wants to imprison you in a hotel for 6 months until you pay a bribe or something, there's not a lot you can do about that.
Yeah, it's an interesting thing. At the end of the day, might is surprisingly common in our civilized world. A lot of times things come down to who has the physical power to grab you and, tie you up or cage you. And that's the only thing that, I try and stay away from politics. I just really don't like politics at all. Yeah. But the only thing that keeps me somewhat interested is just this lesson that my friend from Iraq told me. He said that his family was all of the academics and the philosophers, and Iraq they had the highest literacy rate in the world at one point. So you had all these, it's just this great cultural place, and everybody kind of said, no, I'm above politics. I'm above business. I we finally made it. I can be an intellectual now, and I can think about philosophy. Well, then what happens? Saddam comes along. So the one thing that keeps me, as much as I don't like politics, the one thing that keeps me, thinking about it is that, some thug can come along, and you do have sort of a responsibility to kind of like be aware of that, because otherwise you'll get, you could end up like the intellectuals under Saddam's reign who just got locked up. And that's one of the benefits of Bitcoin, is that it's a bit harder to seize. Right. I mean, they can still lock you up, but at least they can't get the money quite as easily as they can with some of the old school methods.
As they say, you may not be interested in politics, but politics is interested in you.
Exactly. Yes.
But that's precisely it. Some people describe Bitcoin as this silver bullet for resisting oligarchs and so on, but it's just one tool in the toolkit. It's a very powerful tool, and it's great that it exists, but it's not sufficient on its own. I mean, sovereignty goes much deeper than that, and there's a lot of other kind of complementary tools that we need to work on. I mean, encrypted messaging is a very obvious part of that toolkit. I would say something like 3D printing guns, even something as simple as that, is another asymmetric tool which restores power to individuals versus the state. But yeah, Bitcoin is a key linchpin, but not the only one.
We need somebody to figure out 3D printed ammo. That's a startup we can invest in, right?
Yeah, that's a good question. I always see that, in the discussions around 3D printed guns, like how do you create barrels, for instance? And I guess there's ways to make machine barrels at home. And then ammo, again, it's not clear how easy it is to actually manufacture ammo.
Yeah, it's progress though. And there's alternatives, like there's pneumatic guns that are 50 caliber. I mean, they're just as powerful as regular. You can't shoot them fully auto, but there's a lot of interesting things that could come along that technology can adapt. Guns haven't changed much. I mean, the 1911 came out in 1911.
Yeah, it kind of stands
pretty much
to reason.
Exactly the same gun as the modern SIGs and the Beretta that came before the SIGs. That was the sidearm of the military all the way through to the 80s and 90s, and still is in some cases. Then the Beretta came along. Now it's the SIG. Pretty much the same gun. The SIG and the 1911 aren't that different. And so you have like 100 years, you haven't changed. It's not like the SIG is something that, like an iPhone, it's very, very similar technology. So we may have some ways to go on, bringing things to the next level with some, there's interesting non-lethal technology and pneumatics and stuff like that could combine with 3D printing. But absolutely, those kinds of pieces of technology, they all are part of the cypherpunk sort of vision, I guess, of how we can use technology to make our world a little bit more free and a little bit more private.
And just costlier for a would-be authoritarian state or, entity to suppress individuals, basically. I mean, it makes me think of in particular, the gun debate around 3D printed gun, like CAD files or whatever, distributing effectively codes or strings of numbers, those strings of numbers are now illegal, in a bunch of states.
Right.
Literally just coordinates. That's literally all it is coordinates, for a machine to follow a CNC mill or something. It makes me think of the first crypto wars. I mean, I wasn't really around for them. I guess in the 80s or was it the 90s? I mean, you'll be more familiar with this.
For PGP?
Yeah, exactly. Yeah, when PGP was considered a munition and then people like Adam Back cheekily printed it on T-shirts, and eventually the weight of information, the portability of information was just overpowering, and that reality bent the state to its will, basically.
Absolutely. And when you put things into writing, I think that's so powerful, because it's one thing for somebody to say, I'm going to ban encryption that could be used by the drug dealers and the bad guys. That may sound appealing to some, but if you say, I'm going to ban words on a piece of paper because I don't like those words or how they can be used, that's going to get a lot less sympathy. So I think that same argument for the PGP and encryption, that's a great argument for Bitcoin. There was the mayor of Plattsburgh, when I was working as a volunteer with the Bitcoin Foundation, the mayor of Plattsburgh, New York, they had some silly status deal that they had a power advantage because they're near the hydropower, and there's some sort of scammy weird deal with the town. And because of that, they have very cheap power. So because of that, some smart entrepreneur came in and set up a huge Bitcoin mine. And then the statists were like, oh boy, we didn't intend that. So they tried to outlaw Bitcoin mining. And I wrote a letter. And so I looked at the law, and the law said, I said, first of all, the important thing that it seems so overlooked that a lot of people don't do, whenever there's a law, look at the actual law and what the text says. So I look at the thing and look at the definitions, and so I say, all right, what is this? How am I going to challenge this? What is this law? So the law says, Bitcoin mining is illegal. And I say, all right, how do you define mining? It says 3 or more rigs attached, whatever, blah, blah, blah. So I figured out that by that definition, if I strung 3 BlackBerries together, I would be in violation. So I wrote a letter to the mayor, and I said, I have 3 nodes. I carry them around. I use my own power. It's my own solar power. I'm going to be staying in your Days Inn hotel. And one of them has the Bitcoin, and one of them has my own poetry on a blockchain. And then I forget what the other one, Ravencoin or something. And I said, I think it was Ethereum, Bitcoin, and Ravencoin. And I said, and I've embedded poetry because I like this poetry and I want to read it in my own hotel? Am I going to be in violation of your rules? And I would like to know if you plan on prosecuting me. And unsurprisingly, they don't respond because they don't want to. That's the last thing they want, because they know full well that I'm trying to antagonize them. I'm going to go in there and I'm going to file a free speech lawsuit if they try and prevent me. And I'm going to go to a judge and I'll say, Your Honor, I was trying to read my poetry on my own power supply in my own room, and they don't like it because so they, at the very least, they're probably going to have to change their definition of mining and go after some other legal angle of why they think they have that authority to negotiate it. But they don't have the authority, in my opinion, to regulate any kind of speech. So I'm always ready to fight if somebody comes along with something trying to say you can't run this particular software.
And I think when in situations like these, we're talking about fundamentally conveying information, whether it pertains to cryptography or to cryptocurrency or coordinates for manufacturing a firearm. And the toolkit, the kind of mental toolkit regulators have, is so under-equipped to deal with that. And it's like a hobby almost. It's entertaining to watch the dance because, policymakers will try and, reckon with these things in some sort of antiquated way and try and write laws that capture them. And then you just get people pointing out that fundamentally we're talking about just strings of information here, which are open source and non-proprietary, and they can spread like wildfire. So there's almost not that much you can do about it.
I know. And that's the great thing about the activist community up here in New Hampshire. There's a lot of people that I've learned a lot from, because that's sort of their mode, is they just challenge these things, even non-crypto things, even things outside of what you're talking about, but the same general idea of just you making it uncomfortable for the regulators. It's very easy to say, here's this well-meaning law that we're passing because whatever, save the children. But it's a lot harder when somebody comes and says, no. There's a piece of that I disagree with. And what are you willing to do? Are you willing to shoot me over it? Because this particular, and there's almost always something that you can find in there that, you can have a use that is protected. When they say you have to use this kind of certain use of this technology or another, throw the Bible on there, and then if they ban a piece of technology, throw the Bible on there, and then go and say, okay, now I want to read the Bible. Is that going to be banned? And then they're going to have a harder fight, and it's much harder when you put it in those kind of terms. And that's a great thing about some of the activists, like especially around here, where they'll just continually fight these things, and it keeps the legislators and the enforcers a bit more honest about it, because otherwise they would just randomly pass anything they want. They just say you can't have any of this stuff, but that's not the way laws work in a civilized society.
Yeah, and to be clear, I'm not against the notion of a state existing by any means, but I do find much of the regulation of obviously the financial sector to be extremely overbearing. And a pitch I've been trying to develop and kind of make is, hey, look, the US is actually really well positioned to underwrite public blockchains and cryptocurrency because those are neutral technologies. They don't really discriminate, and they work in favor of protecting private property. They define private keys as private property, and they were kind of pro-freedom, pro-privacy, pro-individual technologies. And those are pretty American values. And the odds are that there's no other major world power which has those values and is willing to underwrite those technologies. So we might as well be the ones to do it, even if it means disrupting, our payments monopoly or, our control over the financial system through SWIFT, etc. That's kind of my pitch. I don't know if it's catching on, though.
I like it. I hadn't really heard that. That's a great way to look at it. Every country's goal should be to outgrow its own fiat. The United States has matured to a point where we're free enough. Why the heck do we need What do we need fiat for? This is America. We're a free country. We don't need a bunch of people in big fancy offices. Sell those damn offices. That Fed building is worth at least $100 million. Put that thing on auction, make it into Airbnbs or something, and fire all these clowns that our tax dollars are paying. Give us back the money, and we don't need bureaucrats we don't need Pelosi and Trump to tell us what money is, and they're not even telling us money. It's people who died 200 years ago. We already can figure out money. Somebody created a better way, and we can use that. We don't need them.
There's a gleaming Federal Reserve building in the middle of Boston here. Actually, it's it adjoins. You probably see it. I don't know if you've ever been to the Fidelity offices here in Boston.
Oh yeah, for sure.
245
About 10
somewhere.
million times. I live down there, remember?
Oh yeah,
So I'm a local.
So you know the one I'm talking about. And when I worked at Fidelity, my office looked out right across the street on this white Federal Reserve building. I mean, it's the site of the Boston Fed. They even have Fed police. They have police cruisers which are labeled Federal Reserve Police, which I just always thought was the funniest thing.
Yeah, they got their own. Yeah, and those cats are making, 90 grand a year for a job that should be $15 an hour. It's a security guard, and they're sitting like, as if they're guarding money in there. Like it's got gold. I think there was gold in right around there. I think there was a building in the 60s. The Boston Trust Co. is right there, and I think they used to actually have like real Federal Reserve gold, but I don't think they've had any like real money there for certainly, your lifetime or probably my lifetime.
It always cracked me up because it's a heavily militarized building. If you walk around it, I mean, there's bollards. You can't really get close to it. It's like really strong, tight security. I'm always kind of chuckling to myself, like, what are they guarding? Like the laptop where, I don't, whoever it is at the Boston Fed presses, the enter button to like print dollars.
Yeah, they're afraid somebody's going to sneak in and print 2 trillion. It's like, oops, they already did that. They don't need to sneak in. What worse thing could they do than the Fed already does on their own?
Exactly, but it always struck me as just, I don't know what the feeling was exactly. This exquisite juxtaposition, working at Fidelity, working on Bitcoin, one of the largest asset managers, trying to steer them in the direction of Bitcoin, and then I'd look out across the street, see the Federal Reserve doing whatever it is they do over there. Still don't know exactly. One thing I wanted to return to actually was security tokens. So we talked about tokens which happen to be securities, kind of de facto securities, and maybe why they should be explicit securities and why that makes sense. Talk to me about actual security tokens which are issued under kind of the current established securities frameworks. I mean, we were talking a little bit before the call. You were saying some people who don't like them for the wrong reasons. Some people who like them also like them for the wrong reasons. So tell me a little bit about that.
Yeah. So under this kind of belief that I have that we talked about a minute ago, which is sort of that this definition is very broad and therefore most good instruments, that especially ones that we recognize like equity and bonds and investment contracts, those are going to fall under the definition. So if you want good stuff to trade, it's going to be a security. So you have to comply with the laws. So then if you're going to be a token, that you want to do a fundraise on, it should be a security. So the interesting thing is understand, to answer this question that you asked, is understanding what it does and doesn't do. And what people misunderstand who are fans of it, they think that somehow being a security token makes it worth more. And that couldn't be more wrong. What makes a security have value is the terms of the security. And the terms are just basically a piece of paper that say what it is, as you well know, because you do that all day in private markets. But same thing, public markets, private markets. A security is a security. It's a piece of paper, some terms that say what it is. So if it says, here's a special super duper extra voting share that the board of Apple says has super voting power 10 times more than other shares, and it's limited, and here's, we're doing 100,000 shares. Well, that clearly has value. There's just no question that has value. And making it a token or not doesn't really add to the value or take away from the value. So, people kind of getting hyped up who don't really understand economics that well think like things that are tokens have value just because they're tokens. So that's been a lot of the hype and some of the unfortunate hype about securities tokens. The good news is most of the real scammers haven't done securities tokens because it's like a lot of extra work. So there has been some low quality projects and there will continue to be. I've mentioned this many times, but overall, it's just a different structure. So what it does do, and this is the thing that even people who are fans of it don't get, and also the people who dislike it, particularly a lot of my Bitcoin friends who just don't get it, although more of them are coming around with these projects like RGB and Liquid and other things that are exposing more sort of Bitcoin maximalists and others who maybe weren't fans of securities tokens before to be more open to them. And what it does do is just one of the few good uses of a blockchain, in my opinion, is it's really just a ledger. It's a ledger that says who owns what, and it's a particular type of ledger that's more expensive and harder to run. And in exchange for that being more expensive and harder to run and less efficient in some ways, you can have it more decentralized. So you don't have to trust one party; you can trust sort of a crowd. And that's the way I look at it, what a blockchain is. And so that, a lot of things, I always joke about putting dog training on the blockchain. There's a lot of things like, oh, we're going to put food, and IBM has their ad like, we're going to put diamonds on the blockchain so there's no more blood diamonds. And I don't know, some of these things may work, may not work. But I think that in the case of ledgers, the interesting thing with securities is a lot of people don't understand where the ledger is and how it's run. They assume that the company has it because that's the way it works for startups with a cap table. But that's not the way it works in the public markets. Apple doesn't have the ledger that says who owns what. And neither does Charles Schwab or Fidelity. If you have a Fidelity account and you own Apple, they have their ledger. They know how many Fidelity accounts have it, but they don't communicate with Apple. They sure as heck don't communicate with Schwab. Schwab calls up Fidelity and say, hey, I see a ACAT transfer coming in from your account. How do we know these shares are real? Fidelity doesn't sit there and say, oh, hi, Schwab, let me get the ledger for you. Here's our whole client list. No, they don't even communicate with each other. So who is the ledger? Do they go to Apple? No, it's all done by a central group called the DTCC. And through this big process, and in Europe, it's Euroclear. And there's this whole big complex thing with who actually owns it. They're pledged to CD and Co. and all this other thing. But basically, because Schwab and Fidelity and Merrill don't trust each other, and because the issuers can't manage those databases and don't want to, Apple doesn't want to be dealing with millions of transactions a day running a ledger that they don't run. They have to trust a third party. And that's what they've been doing since the 60s, once the volume became too difficult. Even then, back before then, you had kind of transfer agents, and they'd have literal books, like big fat books, and they'd reconcile them at the end of the day or the end of the week with all the brokers. But that just became impossible. They used to physically move the certificates around, and they still kind of do. They move them through PGP on these centralized, ultra secure databases. It's trillions of dollars. So it's a very serious business, and it's not easily fixed. And it's already centralized, and there are limits to the centralization, which is why it takes days and days and days to transfer securities between Schwab and Fidelity.
Yeah, clearinghouses were actual clearing houses, like buildings, right. Where both for shares and for things like checks.
Did you ever see a certificate in you probably never have seen a certificate. It was the very beginning of my career was the last certificates that I ever saw. I bet you never saw a certificate in Fidelity, did you?
No, nowhere to be found. Yeah, I don't know.
I don't think I've even seen a certificate for 20 years.
In terms of the merit of tokenizing a security, so you'd say the principal advantage is it's kind of a fair ledger of record that many parties can mutually trust to host it on a blockchain.
Right. And with that comes some advantages with how you can move it, because you know what's true. And if you have something pegged to, I use the Bitcoin blockchain as an example a lot, because that, everybody kind of agrees that that's a real blockchain that's, secure. Not everybody agrees on Ethereum or whatever. But anyway, if you take Bitcoin or another chain and you say that this is a statement of truth, that Nick really has this 100 shares and he's moved it to Bruce, or from this address to this address, we can see those addresses and see that that's a pretty good statement that can be relied on. So because of that, it enables us to move things in a little bit less, frictiony way. I can move a Litecoin from me to you over the phone. We could do it right while we're talking here, and you'd get it in a minute. And we could just as easily send it to somebody in Taiwan. You can't do that with securities. I even though I'm a broker and you're a financial professional, I can't send you shares of Apple. It would take 10 days minimum.
Can you imagine if we tried to finally settle a share of Apple between the two of us?
Especially like actual ownership. I mean, I'm literally own a broker dealer, and I don't think I could figure it out.
So we have all the tools to maybe we should try and do it and then chronicle the experience.
Yeah, well, you can create. I mean, so we can create something outside of the other system. I mean, we can create, and I've even done a couple samples of this. Chainstone itself is tokenized, and we only have one investor. So we sent 3.6 million shares at $1 a share to our investor, and we did it live on YouTube. And he got him on the phone, Medici Ventures, and they say now I mean. The reality of that is that it's pretty basic technology because it's a pretty centralized ledger anyway. I mean, it's only one investor. So we really do have a cap table, and that's not a security token in the sense that it's never moved again other than that one investor. And by the way, anybody listening, you have a significant amount of new regulatory obligations if you do go and move something around. If it's the way we did it was a special way, so don't copy what we did it. But if we wanted to go to the next step and we wanted our investor to sell their shares in the secondary market, or we want to do a secondary offering, that's when it gets really interesting, because then we could move things around, and you can also take more granular issues. Right now, you as a firm, it's a serious thing for you to take on an investment because you have to have scale. But if it was much easier for people to just say, oh yeah, Judy's idea sounds pretty cool, I'll throw $200 towards that, or I'll throw 5,000, and make it easy so that especially if you could do it through like a public, I mean, I'd love it if you could go into your Fidelity account and instead of having 20,000 mutual funds and 1,000 stocks, you had 50,000 or 100,000 stocks. Right. You could be like, oh yeah, my cousin told me about this really great restaurant, or this dry cleaner chain in Arizona is just cranking it because they have some magical growth formula. I'm going to invest in that, whatever it is. And you can have all kinds of interesting things with people doing rolling funds that specialize in ultra specific areas. Little funds that invest in startups, and things that just diversify away from sort of the conventional, because there's trillions of dollars that's locked up in businesses, not just small businesses, but small and mid-sized businesses that just don't trade. And so that would be cool if those equity owners, the owners and founders of those businesses, didn't have to worry about running the ledger. You could kind of move things around, and you just issue some stock and you get a check, and then it trades kind of like a publicly traded company. Apple doesn't worry about who owns their stock. As far as a logistics thing, they care about serving shareholders, but they don't worry about the logistics of moving these things around. So that's one thing that the tokens would solve. Yeah,
one thing I think maybe capital markets could learn from DeFi, can't believe I just said that as a preamble, would be, I thought the liquidity mining idea, which is obviously just a form of synthetic mining, where instead of you're substituting capital for electricity. Liquidity mining to me was very, very interesting because it involved distributing admittedly dubious share of ownership in a protocol or project in exchange for your contribution to that pool of liquidity, to the exchange, etc. Now you can imagine generalizing that to a network-driven company with lots of users that are stakeholders. And then maybe you want to align incentives, or you want to reward those stakeholders with effectively equity in the network that they're building. So, the classic example would be Uber giving tiny fractions of shares for every mile driven by their drivers, to compensate them in a slightly better way than maybe just old dollars. And that's kind of too difficult. I mean, I guess you could do that in theory as a public company, but certainly not as a private company. You couldn't have a big retail shareholder base like that.
Yeah, I'm hoping, and it will take a while because there's a lot of regulatory and technical challenges to do that, but we're getting closer. Broker dealers can now sell a fractional piece of a share. When I started my career, you couldn't even buy an odd lot. You kind of had to have 100 shares, Yeah. So if you didn't have enough money to buy 100, I mean, Berkshire Hathaway was an exception. They'd let you do like 10 shares, but the traders kind of looked at you weird if you did an odd lot, and you weren't guaranteed to even have it executed. And now you can buy a fractional. You can buy $5 worth of Microsoft stock, and so there's some different things that are making investors and the issuers get a little closer. And I think that would be great. People who own stock will notice that you never get any communications other than the proxy statements. If you own Facebook stock, you don't have Zuckerberg on your inbox every day saying, hey, our stock's doing well, here's a new thing we're working on, buy some more. And there's some regulatory reasons for that, but a lot of it is just they don't really know who you are, and there's several layers in between investors and owners. And I'd like to see that collapsed down on both the small businesses, so that even your local restaurant will have maybe 20, maybe instead of a family owning 100% of it, the family owns 80% and the community owns 20%.
Yeah.
There's a lot of powerful things like that, particularly with the missions of the different businesses and the way that they work. You can have more social driven businesses, and a lot of things aren't the next great venture capital story that's going to do a 10x. They're the, largest paper supply company in Nebraska that's been doing consistent revenue growth for 30 years. It's a great business. It's not something that Andreessen's going to invest in, but it doesn't mean that it's not. I know a company that, as a financial advisor, I've served all kinds of interesting companies. They make swimming pool liners and headphones and, ball bearing grease and boring stuff like that. But their business is doing millions and millions in revenue. I know tons of entrepreneurs who run these businesses doing, 30 million in revenue, and they make grease or something like that. And I think that more of that value should be unlocked. Those are good old school stable value stocks, and they're just too small to be publicly traded. But if we could have tokens, make it so more people could share ownership, and for the big companies like the Apples and the Facebooks, if they were closer to their shareholders, I think that's just great. It gets people more interested. They care more about the business. In the case of small businesses like restaurants, you have more stakeholders who, if I owned $1,000 worth of shares in a local restaurant, for one thing, I'd love to do that. Even though it's not part of my major portfolio, I think it would be kind of cool. And for another thing, you better believe I'm going to buy all our catering and all our events and everything. If I own even a tiny bit of shares, that's the restaurant I'm going to support. Yeah. And I think that kind of, sharing and having more stakeholders and shareholders is a really powerful thing that making these ledgers work better can lead to.
Yeah, and I would say that's one thing where the crypto industry shines relative to the traditional financial industry is just creativity, especially with regard to its incentive alignment. I mean, you look at some of these exchange tokens, and however questionable they may be in terms of a governance standpoint, or actually the actual legal entitlements that you get when you buy them, you're buying kind of a seat at the exchange, you're buying a discount on fees, you're buying all number of things. It kind of reminds me of that situation with Ford a while back. I don't know if you're familiar with this, where if you own enough shares of Ford, you could actually get effectively the employee discount if you bought a new truck.
Oh, really? I did not know that. That's fascinating.
It was a joint security token, and then there were kind of utility token mechanics layered on top of it. I mean, the whole thing was virtually impossible to actually instrumentalize. Like, you had to prove you own the share, you had to send faxes, it was this whole thing. You had to use notaries. You could do that more efficiently with actual token security that exists in token format. You can really prove your ownership. There's much less intermediation. And indeed, that's what we've seen from the token issuers of the world. You see stuff like INX, which is an entitlement to certain cash flows, and it's also a seat at the exchange. I mean, you can bundle these things together and really change the nature of an equity relationship with a company. It's not just a financial relationship. You can become more of a stakeholder, a really direct stakeholder, and that's the kind of thing that I think is really interesting.
Yeah. That's a great way to look at it. That is very exciting.
I want to dig up that article where some journalist went ahead and tried to actually get the discount on the Ford truck.
Yeah, I mean, that's so well suited for crypto. And like you said, these kind of crypto is really good at incentivizing communities, and it can be a tool for building communities. There's something cool about owning a token, as we've seen from NFTs. Even if you don't have rights in it, people like that. There's kind of an excitement, it's cool. I'm big on valueless tokens. I don't know if I made a paper called the thumbs up token, and it's a 1-line white paper. It says, here's 10 million thumbs up tokens. They don't do anything. and that was my white paper. I gave away, I think it was 10 billion, and I think I gave away $500 million, and then I got tired. But somebody who I gave a bunch of them gave a whole bunch to other people. So it was just kind of an experiment. But I love, like, value. Even a valueless token can be kind of fun. But when you combine it with something with real value like equity, I mean, then it can be really powerful. And crypto is particularly well suited for building communities and, like you say, verifying that you really own the shares. And how cool would it be if you have a wallet, and in your wallet is your Bitcoin and your Ether and your Ford stock and your Apple stock and some Tesla and maybe a couple funds and your couple NFTs, some art or maybe rare art or scam art or whatever you bought, and it's all in there. And then Zuckerberg can send you a message to your wallet because he knows you're a shareholder. And maybe a competing broker would do. The brokers would hate this, but wouldn't it be neat if you could? Because right now you can spam an ETH address. If you see somebody that has 10,000 ETH, you can spam them.
Yeah.
If you had 10,000 shares of Ford, maybe the users could have the option of accepting or not accepting things. So you could get not just a Ford discount. Maybe Chevy will give you a discount. Say, hey, you own a bunch of Fords, so we'll give you a discount. There's all kinds of clever things that can be done, but you can't do that right now because there's just layers of intermediaries. When you own a stock at Schwab, you own a claim that Schwab has, and then Schwab has a claim on CD & Co., and then CD & Co. has a claim on DTCC, or is it the other way around? I don't know, DCC and then CD, and then the issuer. And so it's in the cases where these things have actually had to go to court, it's really hard to even prove that who actually has the stock. It's nothing close to it like a crypto token where you really hold that. And securities were pretty cool in the old days when they were a piece of paper, because you had a piece of paper and it was worth something. There's a bearer, closer to a bearer instrument. There's drawbacks with bearer instruments, but there's definitely something cool about an actual self-contained token that doesn't need these layers of bureaucracy with CD & Co. and DTCC and claims on claims on claims and transfer agents and brokers and clearing firms and all this other stuff. You just have it and you own it. I mean, just like when you buy Monero at your Kraken exchange, you buy Monero and you got it and you put it in your wallet and it's yours, period. And that would be really cool if you had that for securities.
Isn't it cool that we've come full circle from bearer instruments all the way back to bearer instruments? And that's what powers this whole industry. Even if security tokens themselves they're not necessarily bearer in the truest sense. A lot of them are kind of still paper certificates. Well, Bruce, we've had you on for a while, over an hour now. I want to thank you for coming on. This has been really fun. I know you have a vibrant online presence. Where's the number one place people can reach you?
I'd normally say Twitter, but I'm a little cautious of Twitter lately. So I got to do more on my brucefenton.com, but I'm on either of those. And like you said, we're doing the clubhouses. So that's fun too. But I'm always a big fan of your stuff. I'm always impressed by the quality of your writing, and you have a wise old soul in the way that you speak and the way that you think about things.
I appreciate it. Thanks for coming on.
All right. Have a good one.
Thanks again, Bruce.